Hello guys and welcome back to the channel. So in today's video we're going to take a look at a Tesla bear that has lost his mind. It's a video that we're going to watch because as an investor it's your duty to investigate the bear case and the bull case. So even though I think this guy is full of shit and he lost his mind, I still want to hear his arguments. So it's going to be a fun one. And as always, if you like this content, please make sure you hit the subscribe button down below. And if you want to go even further and support the channel, check out the first link in the description box below where you can support the channel from $5 a month and get access to all the valuations and all the tables that I use. You get direct access to me and my eternal gratitude. So let's begin the video.
Gordon, you're on top. Why don't you go ahead and start? At least as far as the stock price goes, it's been headed your way in recent months.
Yeah, so I think when you look at Tesla, a company that has a market cap valued at the next 9 largest car makers combined, yet only sells 3% of the cars those car makers sell, to see their deliveries down 18% in Q2 from Q1, by the way, which was flat, I think it's a big disappointment. Look, I think objectively,
this guy is such a known Tesla bear, and you know, this is when you make predictions without timelines. He has been saying since Tesla was, I don't know, probably $200 that you need to sell the stock and it's going to go down to zero, you know? And the stock went up to 1,200. And yes, the last 6 months, he's been correct. But anytime he's on air, he's like, yeah, the Tesla deliveries are crashing. They're losing all the market share. And he keeps saying the same thing. And his point on the valuation of the other companies. So we had Elon Musk on this podcast where he explained that, you know, the big auto OEMs, they are basically just buying parts from parts manufacturers and then they're putting them together and then they ship the cars off to the dealership. And Tesla is like many companies in one, and meaning that they have vertical integration, they do their own sales, you know, they have their own supercharging system, which is like the equivalent of, you know, Ford owning, you know, Circle K gas station chain. So it's not very comparable. And the most important thing, Tesla is growing like crazy. And if you look at all the other auto companies, they're shrinking and Tesla is selling every car that they can produce. So I don't believe that you can compare Tesla to these other auto companies.
Tesla has lost their product edge. You look at, there's a number of competitors out there who have similar or better real world range, better interiors, similar or better charging speed, and are just better quality. Consumer Reports ranks Tesla second to last in quality, and British Consumer Outfit, what question mark, says they have among the least reliable cars. So I think the fact that, you know, they've lost their product quality edge, their deliveries are declining. We talked about their market share in China dropping from 17% to 10%, market share in Europe dropping from 30% to 15%. But I think these delivery numbers being down are a big problem for the bulls.
How is that a big problem for bulls? I mean, I really hope many people are going to sell based on this. And based on what has Tesla lost its product edge? I honestly don't know what he's talking about.
Okay, take it away, Gene.
Thank you, Joe. The deliveries were up 27% year over year. That was a disappointment. Tesla is being impacted by the macro. In the March quarter, deliveries are up 68%. If you adjust for Shanghai, it was up 40, call it 42, 45%, something like that. Still a deceleration from March. And there is no question from my perspective that Tesla is being impacted by the macro. I do have a different perspective than Gordon when it comes to where this ultimately will go. And I'll just pick up on 2 points. The first is this kind of losing momentum. We've had this discussion before. GM, their overall units were down 15% year over year. Surprisingly, they delivered 7,000 EVs in the U.S. in the June quarter. That was down 34% year over year. So we're talking about a 50% growth spread. And I would put it this
GM, the company that leads the electric car revolution, according to the United States of America, produced 7,000 cars and it's 34% down compared to last year.
Is I totally agree. If you believe that in your heart of hearts that Tesla is just another car maker, then it is difficult to get comfortable with the valuation. But if you take the perspective that this is a disruptive company that is going to have higher growth rates in a massive addressable market, I think you can get to a point where they can have, call it, go from 70 billion to 400 billion in revenue over the next 5 years. Just remarkable growth. Remember, Tesla makes cars, but they also make solar. They also are going to get into HVAC. I don't think the robot Optimus Prime should be part of this, but my point is no other car company is doing this. And so I think that to be bound to think about this simply as a car company misses the bigger picture.
Okay, I want to see my own valuation model that you can get. It's really funny. He said that they're going to get into other businesses and don't think with the Tesla bots. So basically, if you're buying Tesla stock currently, I'm telling you, nobody is thinking with that. I found my own table. So this is the one that you can get on Patreon and you can play with this. And I also have them going to $400 billion in revenue in about 5 years from now, which is exactly what he said. It's just nice to see that me and this guy think alike.
You want to come back? Go ahead, Gordon.
Yeah, so, you know, Gina's made this point many times, but I just want to stress, 95% of their revenues come from selling cars. The other 5% come from an energy division that had negative gross margins. So to say this isn't a car company, I think is just dead wrong. And when you think about the investment that Tesla's doing, think about this, guys. They did a big, huge, rollout of these 2 production plants, one in Texas and one in Berlin, and weeks later they're shutting those down. I don't know another car company that has done that. And Gene, again, this company is valued at more than the next 9 automakers combined, yet sells just 3% of the cars thing. Hey, so we need to see, hyper growth, substantial growth. The only market they're profitable in is China. They sold 8,000 less cars sequentially in China in Q1, 17,000 less cars sequentially in Q2. So to say that they're growing, that's just not true. So the fact that their growth has now declined and they generate their revenue and their profit from selling cars in China, and that's a big problem for them, I think you have to consider that, Dean. One more thing. To get from roughly 1.4 million cars sold now to 20 million cars sold in 2030, which is the numbers that Gene is referring to, they would literally have to build a 500,000 car plant every single quarter, fully sold out every single quarter from now through the end of 2030. I think we all know that's absurd. So the valuation, again, I think is absurd, and I think you're going to see that reflected as we move to the rest of this year.
What is this guy talking about? I mean, let me see in my model. So it's 7 million cars that would take them to the 400 billion in revenue. So I don't know what he's talking about. Yeah, and that was the end of the video. Anyways, comment below if you guys have seen this video, if you thought it was fun to cover this. Obviously, this is only entertainment value. We didn't learn anything because this guy is an effing idiot. I'm always surprised to see this. So I hope you had fun. Thanks for watching, and I will see you in the next video. Ciao, ciao.